Welcome to Mastering Personal Finance, a comprehensive guide. In this video, we'll provide you with all the knowledge and tools you need to take control of your financial future. Whether you're just starting out or looking for advanced strategies, we've got you covered. We'll start by discussing the importance of budgeting. A budget is a financial plan that tracks your income and expenses, helping you to manage your money effectively. Let's look at an example. Suppose you earn $3,000 per month. You decide to allocate your income as follows: 30% for housing, 15% for transportation, 20% for savings, and 35% for other expenses. Tracking your expenses is key. Many people fall short in this area and end up with unforeseen financial difficulties. Free apps like Mint or Anab, You Need a Budget, can help you keep tabs on your spending. Next, let's talk about the concept of cash flow. Cash flow is the amount of money being transferred into and out of your account. A positive cash flow means more money is coming in than going out, while a negative cash flow indicates the opposite. For instance, if you receive $4,000 in monthly income and pay $3,500 in expenses, your net cash flow is $500. This indicates a positive cash flow and a stable financial condition. Investing is another crucial aspect of personal finance. Investing allows you to grow your money over time through various financial instruments like stocks, bonds, and mutual funds. Let's break down an example of investing in stocks. Suppose you buy 10 shares of a company at $50 per share. After a year, the stock price rises to $70 per share. The profit from your investment will be 10 shares asterisk $70 to $50 equals $200. To better understand the potential for growth, let's take a look at historical data of the S&P 500 index over the past 20 years. This index includes 500 leading companies and is a commonly used benchmark for the stock market. While investing presents a great opportunity to grow your wealth, it's important to understand the risks involved. Stocks can be volatile, and the market can fluctuate. Diversification, which means spreading your investments across different asset classes, can help mitigate these risks. For example, a diversified portfolio might include stocks, bonds, and real estate. This way, if the stock market is underperforming, your bonds or real estate investments might help balance your overall returns. Another essential concept in personal finance is the emergency fund. An emergency fund is money set aside to cover unexpected expenses, such as medical bills, car repairs, or job loss. Financial experts suggest having 3 to 6 months' worth of living expenses in your emergency fund. For instance, if your monthly expenses are $2,000, your emergency fund should ideally be between $6,000 and $12,000. Debt management is another critical component. High-interest debts, like credit card balances, can quickly spiral out of control. It's important to prioritize paying off high-interest debt as soon as possible. Consider a scenario where you have a $5,000 credit card debt at an interest rate of 18% per annum. If you only make the minimum payment, it will take longer and cost more in interest. However, if you allocate more money towards paying off this debt each month, you'll save on interest and clear the debt faster. It's also wise to set financial goals. Whether it's saving for a house, a car, education, or retirement, having clear financial goals helps you stay focused and motivated. For instance, if you plan to buy a house in 5 years and expect it to cost $250,000, you would need to save $50,000 for a 20% down payment. By setting aside $10,000 each year, you can reach your goal in 5 years. Finally, let's summarize key takeaways. Use budgeting to manage income and expenses. Ensure positive cash flow. Invest wisely while understanding risks. Maintain an emergency fund. Manage debt effectively. And set clear financial goals. Don't forget to like, subscribe, and hit the notification bell for more personal finance tips. Keep learning and improving your financial health.